Good evening, everyone. Welcome to our exclusive webinar. I'm Ashna Manish. I handle growth marketing at Bridgewea, and I'm thrilled to have each one of you with us today. Our webinar today, titled Beyond the Buzzwords, Crafting a Tech-Savvy Investment Blueprint, is not just another session. It's an exciting journey into the realm of modern investing. In today's fast-paced financial landscape, staying updated about current investing trends, it's not just important, it's absolutely crucial. And today, we are here to explore how we can stay not just current, but ahead of the curve. I'm delighted to introduce our distinguished speakers, experts in their respective fields, Mr. Vijay Chaturvedi and Mr. Akshaya Bhargava, who will be sharing their valuable insights and strategies. Let me introduce our first speaker, Mr. Vijay Chaturvedi, the Chief Business Officer at HDFC Securities. With over 25 years of experience in finance, Vijay has spent the last 18 years focusing on understanding the complexities of the Indian equity market. His impact at HDFC Securities is profound, shaping the organization through his instrumental role in retail broking, wealth management, orchestrating core branch channel business, handling HNIs, and strategic corporate sales. A postgraduate in marketing holding a prestigious PGDM degree, Mr. Vijay Chaturvedi is not just an executive, but a key player in HDFC's success story. We welcome you, sir.
Thank you.
Coming to Mr. Akshaya Bhargava, founder and chairman of Bridgewea. He is Indian-born senior banker. He has 44 years of work experience at Barclays and Citibank. He was most recently global CEO for Barclays Wealth and Investments based in London. He is also former CEO of Progeon, acquired by Infosys and now renamed as Infosys BPO. He founded Bridgewea in 2018 and is currently its executive chairman. Bridgewea is a fintech firm that uses AI models to provide institutional quality research to individual investors. Akshaya has also served as an independent director on the boards of Mindtree Limited, Avendus Wealth Management, and Wealthify. Without prolonging the wait, let's now turn to our distinguished speakers for a deeper exploration into crafting a tech-savvy investment strategy. We welcome you, Akshaya. And Vijay, sir, the spotlight is all yours.
Thank you, Asna. Thank you for that wonderful introduction. When I communicated to all my team members and some of the clients, so they were so eager that I am asked not to take much time. So they are eager to hear Akshay sir. But still, how do I want to set the context here. We have come from an era where people used to go for those physical settlement and other things. Slowly, gradually, things have improved. Nowadays, if we look at technology has become a very crucial part of all the investors. So if this is the time, if we do not upgrade ourselves, or if we do not utilize the benefits of the technology or the kind of platforms which have been introduced by your kind of setups, so in that case we will be left behind. And the kind of growth story which is there in Indian capital markets, which with the kind of rally we are looking at, the kind of flows which are there, so I think investors are looking for these kind of products. I know these kind of products are very much acceptable, or they're valuable in the developed markets, let it be European or the US market. But whereas if we see over a period of next 2-3 years, we'll find a good quality appetite of these kind of research and the products in Indian markets also. So I think we are meeting at the right juncture. Thank you, Akshay sir, for sparing time for us, my teams, and our client base in Gujarat and UP Uttarakhand. And I'm sure they are going to enjoy this. So thank you so much. I'll not take much of your time. I request you to just share your views about the organization, the kind of research that you do, the kind of products which we can offer to our clients. So Akshay sir, over to you, please.
Thank you so much, Vijay. It's a great privilege and a pleasure for me to be speaking to you and your team and about a subject that is very close to my heart. In my working life with banks and technology companies and hedge funds and other areas, I have come to the conclusion that financial services is full of buzzwords. बड़े-बड़े word use करते हैं without sometimes understanding the meaning. And many times the customer utility gets lost in buzzwords. The latest buzzword is AI, artificial intelligence.
Right.
So
Right.
what does it really mean for investments? So, in this presentation, what I want to do is talk a little bit about how the machine works, how it works, so that we go beyond the buzzwords and we actually go into reality of how this technology works and what it means for you going forward. So a little bit about the company that I founded. I founded it in 2018 with two other co-founders. One is the CEO, Bruce, and the other one is heads all our AI product development. We all come from large global organizations, from Citigroup, Barclays, State Street, Infosys, UBS, etc. So we all come from big companies, but we are now working in a small company to make sure that and what do we want to do? We want to democratize investments using technology. And
Right.
if somebody asks me, what is your mission? My mission is to really create hedge fund quality investment tools and make them available to individual investors at an extremely low price. So really
Right.
democratizing investment technology. How do we do this? We use AI models and AI algorithms to identify and predict patterns in the market. And then we package these patterns into recommendations that are easy to use by digital investors. Finally, our sales philosophy is that even though our products are meant to use by individual investors, we don't want to sell directly. We only want to make our products available through our partners. HDFC Securities is a big partner for us, and the Equity Select product that we are going to talk about is only available through HDFC Securities for your customers. Okay. Now, let's talk a little bit about technology. We use technology in all our daily lives. India is a poster child of using modern technology at scale, whether it is Aadhaar, whether it is UPI, whether it is e-commerce or whatever. We use technology in deciding what to wear by looking at the weather.
Right.
When we buy an air ticket or something, we do all kinds of research on Make My Trip or other travel sites. When we are buying a phone or a computer or some gadget, इतना सब research करते हैं, पढ़ते हैं, ढूंढते हैं information. But जब investment का time आता है तो ये सब नहीं करते. We are sort of feel a little helpless. Most
Right.
people tend to feel a little helpless. So how can you solve that? And I think today's technology makes it even easier. So the recent advances in technology, especially AI technology, means that you can not only handle very large amounts of data, but you can also use it to identify patterns and make predictions. Now, if you can make high quality predictions that have high level of accuracy, then you can identify short-term opportunities in addition to long-term opportunities. Now, long-term opportunity is very well understood in the market because Shri Warren Buffett and gang have, made it very popular. Look for good companies, analyze them thoroughly, wait for the price to go down, buy the stock, and hold it for a very long time.
Right.
Now, there's nothing wrong with that strategy. It's a very good strategy. It'll make you a lot of money in the long run. But that is not the only strategy. There is a short-term strategy, and typically short-term, it was so volatile and so rapidly moving that most people could not identify patterns. With technology, it is possible today, and with our technology, our goal is to make it accessible to everyone, and that is what the philosophy behind Equity Select. So, what is equity? This is a long-term basket of stocks. I emphasize long-term. So,
Okay.
long-term exposure to equity as an asset class. It is not for, investing for 6 months and going out and coming back in again. This is a long-term investment. It's a long-term basket. But and it's a very big but, it makes you money by predicting short-term movement. So आप मेरे से पूछेंगे कि लॉन्ग टर्म है शॉर्ट टर्म है, आप दोनों चीज एक सेंटेंस में बोल रहे हो, क्या है? So it is a very interesting combination of long term and short term, which we have been able to achieve through technology. So क्या होता है इसमें? You get a recommendation and you can make changes to the recommendation. A recommendation can be 10 stocks that are recommended by the AI machine. It gives you long-term equity exposure. And you can rebalance this exposure every 15 days. So we will notify you every 15 days and you can rebalance it. So what it means that while you're holding equities for the long term, you're not holding the same equities.
Right.
The machine is always
you're not missing on the momentum part.
Yes, exactly. And the machine is identifying 15-day opportunities, and every 15 days telling you rebalance karo. And if you rebalance it, the impact is phenomenal, and you will see in a moment. Now, we don't charge our fees based on AUM, so percentage nahi charge karte. We also don't charge very high fees. The minimum investment we have is 1 lakh, although I recommend at least 2 lakhs, but minimum is 1 lakh. And there is a 6-month plan, 3-month plan, and a 12-month plan ranging from 3,500 to 12,000 rupees, including GST. Okay. So what makes Equity Select unique is that behind it, there is very advanced technology that identifies short-term opportunities for long-term investment. So now let us see practice mein ye kaise chalta hai. So if I look at the flow of how the recommendations are made, there are 3 high-level elements. First is stock selection, second is portfolio construction, and the third is monitoring and rebalancing.
Right.
Each of these has 2 or 3 components to it. So the first step is we get daily data from Bloomberg on about 4,600 stocks globally, including India. We then compute 1,024 features for every stock. Now, pushing 1,024 kahan se aaya? It is actually, we create a 32 by 32 matrix. So 32 times 32 is 1024. That is the logic. And I will explain it later, why we create that matrix. And all our models have been trained using 14 years of historic data. And 14 years, we believe, is good because it gives us different cycles and so on and so forth.
Yes.
And then we used very advanced technology like computer vision and neural networks, which are used in self-driving cars to do image recognition. And the reason we use computer vision is because I spoke about the 32 by 32 matrix, where every cell is a feature. And the color of the cell, it's black and white, but gray. The intensity of the gray, it tells you how important that feature is for the objective of the model, which is 15-day returns. So what you get is 1,000 boxes, each is a different shade of gray. And through 14 years of training, we have found that some pattern of this gray and dark gray and white and all.
Sorry,
yeah. Sorry, go on, Vijay. Okay. If you can somebody just speak? Can you still hear me?
Yes, Akshaya, I can hear you.
Yeah. So let me just continue. So what we do is we take every one of these features and we calculate its correlation to the prediction we are making. So a highly correlated gets a very dark color and lowly correlated gets a very light color. So you have a little box of 32 by 32. Each cell in the box represents the correlation with the objective. And it creates a visual pattern out of numeric analysis. And when we get daily data, we convert everything into a box and we do an image recognition. So it's very fast and it's very accurate. So think about it this way, simplifying it. let us say we create a image recognition system to facial recognition system to recognize brown faces versus white faces. Now, the more brown faces and the more white faces the machine sees, the better it gets at recognizing it. Okay. In the same way, the more winning patterns the machine sees, the better it gets at recognizing it. So it's not only an AI machine, it is something that keeps getting better the more it sees. So that is how we create a universe of stocks. Then we use that universe and we filter the stocks based on liquidity, market cap, analyst coverage, and a few other things. And we create a basket of 10 stocks, of which 6 are momentum and 4 are value stocks. That is the basket that we present to the investor as a recommendation. And that is what people invest in. And every 15 days, every 2 weeks, we come back and say that this portfolio has rebalanced. You should sell these 6 stocks and buy these new 6 stocks. So we encourage people to rebalance and do that. That is the process. Okay. If you have any questions, just hold them. When I finish, very happy to answer questions. In fact, that is how we will get more out of the discussion, by taking your questions and answering them. So what makes Equity Select different? So firstly, like I said, our algorithms have been trained and developed by an expert team using 14 years of stock market data. Secondly, we perform almost 35 million computations every day to produce the best possible investment ideas. And we have a track record of 2 years of having delivered results. And I will show you the track record in a moment. So now let us go to the track record itself. If you had taken 100 rupees and you had invested in Equity Select in end of January 2022, which is when we launched it, by end of November, okay, which is about 21 months, 22 months since investment, 100 rupees would have been 210 rupees 90 paise, versus the same 100 rupees in the Nifty 500 index would have been 122 rupees. So as you can see, it has outperformed Nifty significantly.
Oh.
And yeah, any questions?
No, good to go.
Yeah. So, and as you can see, the outperformance starts with a small amount and keeps growing over time. Now, that is very important. That is what I was saying. Think of this as a long-term investment. अगर 2 हफ्ते के लिए करोगे या 1 महीने के लिए करोगे, you will not get the investment back. The other thing to remember, if you look at the blue area, shaded area, it is not a smooth thing going up or down. It is a spiky movement. Yes. And that is market reality. These are spikes. Okay, there are upward spikes and there are downward spikes. So in any period for a few weeks, you will always see something going up or something going down. Don't get fazed by it. If you think long term and stay focused on the long term, the spikes won't matter. If your focus is only 2 or 3 months, then the spikes will matter and you'll say, kya ho raha hai? So, just a question of how you look at the same data. And you could end up with different conclusions depending on the context. So that is why
I would like to add one point here. See, we interact with a lot of retail investors, right? Now, when we say retail investors, they are actually getting confused by looking at the markets. They are not able to follow the discipline. They do not have any strategy. So if they get these kind of inputs, it can be a wonderful tool for them to make money out of it. At least Absolutely. It will go in a systematic manner, in a strategic manner, and the discipline will be managed. So I see this as a very good value addition to the retail investors basically.
Yeah, that is very well put, Vijay, and it is meant for retail investors. And right. You'll have to explain it to them properly, and tell them that in any 2-week, 3-week, 4-week period, things can go up, things will go down, because ultimately it is the market. But over a long period, you will do well, and you must keep reinvesting your profits and compounding the return. That is what will give you the And that is what this chart shows. Now, let me give you some numbers also.
Sure.
You'll see two tables on this page. The table at the top is the returns table, and the table at the bottom is the risk table. You can see equity select returns, benchmark returns, which is Nifty 500, and relative returns, which is equity select minus benchmark. So as long as it is positive, you're doing well. And as you can see, whether you take 3 months, 6 months, year to date, full year 2022, or since we started, we have consistently beaten the index. So the track record almost speaks for itself. Now let us look at risk. Now risk there are two things. One is annualized volatility. So how spiky is it? And the maximum drawdown, which is the distance between the peak and the trough. And the longer the distance, the more risky it is. The shorter the distance, the less risky it is. Now, as you will see, Nifty 500 is lower volatility. Equity select is higher volatility. Nifty 500 has a smaller maximum drawdown, and equity select has a higher maximum drawdown. So we can conclude, yes, it is a higher risk portfolio because it is more concentrated. Nifty 500 500 stocks. Equity select is 10 stocks. So it is much more concentrated, but it gives you better return for the level of risk you are taking, which is the indicator in Sharpe ratio. So conceptually, what is Sharpe ratio? It is the amount of return you get for taking 1 unit of risk. If you take 1 unit of risk with Nifty, you will get 1.2 return. Whereas with Sharpe ratio, with the equity select, for every unit of risk, you get 3.7 units of return. So Sharpe ratio is the indicator of risk return balance.
Yes.
So higher the Sharpe ratio, the better it is. So as you can see, equity select has a very strong Sharpe ratio, which tells you that it is a much better return for the same level of risk you are taking. Okay. How do you find equity select? I think you all know that. HDFC Securities, click on basket investing, you will see the list of baskets available, click on equity select, and you'll see all the details here. Now, the final thing I want to say, and this is my last slide, after which we will open up for questions. And please do ask questions, because that is where I find everybody gets the most out of it. So for our customers and our users, please remember there are 5 ways to get the best out of something like equity select. Firstly, even though we have a minimum of 1 lakh, the investor should think carefully about what is the right amount to invest. And I'm not prescribing an amount, but the higher the amount, the better it is, because the impact of brokerage and GST and some of those fees becomes much smaller. So
yes,
invest very small amounts, then the impact of fees looks much larger. Secondly, always take a long-term view. This is what I started to say. This is a long-term equity investment. Equity investment in India has done so well. And if you look at where the Indian economy is today, I think the next 20 years belong to India. US may, all kinds of uncertainties going on. Europe is not doing so well. China is, as we all know, has its own problems. So how many large world economies are growing in a regular way, creating value with huge retail participation? India stands alone.
Yes.
I think the next 20 years, maybe more, belong to India. And all of you are in a fantastic position to not just make a difference to your customers, but also personally benefit from what is happening in the Indian economy.
Yes.
I am very, very optimistic.
Right.
Thirdly, evaluate both risk and reward, because sabka circumstances alag-alag hota hai. So there is no standard model for everybody. I strongly believe that people should make their own decisions. And the task of a provider in financial services like HDFC Securities and ourselves is to give people the right tools, give people fully transparent information, and let them make their decisions.
Yes.
So evaluating risk and reward is a very important aspect. Fourthly, please rebalance regularly. We have found that many times when we tell people कि आपका rebalance होने वाला है, भूल जाते हैं, बोलते हैं अरे कल कर लेंगे, and then they don't do it. And not rebalance is, in a sense, passing up an opportunity, because the machine is telling you, I'm giving you 2-week recommendations. Every 2 weeks, it gives you a new, slightly different recommendation. And rebalance is very easy. It's one click. So ज़्यादा झंझट भी नहीं. But you have to do it. Unfortunately, I would do it automatically for you, but unfortunately, SEBI requires that we get the customer to do it themselves. So the customer has to do it. And finally, please remember that value will not continuously go up. It will go down and it will go up. So please don't worry about timing the market or any single rebalance, because this is a long-term investment.
Right.
So with that, I want to stop and very happy to take any questions that you have.
So, Akshay sir, before we go ahead with the questions to, the clients and teams, would like to ask that, this fees which we are charging, so it will remain the same, is, so if it is for 1 lakh rupees or if it is for 5 lakh rupees, or it will vary further?
No, it is exactly the same, Vijay. Whether you invest 1 lakh or 1 crore, you still pay 3,500 rupees for the quarter.
Okay. Then it makes more sense, if the client is investing the higher amount. And see, as you rightly said, see, if we talk about the retail investor, first of all, the kind of risk or the downward probability which is there in this basket, it is much better than what the client at his own does, without going for any strategy or discipline.
Yeah.
So in that, at least here, we have some strategy, some discipline, some logic, thought process behind the investments, which is absolutely missing, in case of retail investors when they do trading at their own.
Correct. That is absolutely right. Absolutely right, Vijay. Because many times, what happens here? Some friend tells me, aaj HDFC khareed lo. Okay, so I'm going to HDFC. Then I don't meet that friend for 2 weeks. Then he tells me, "Arey, tune becha nahi? You should have sold 3 days later."
Exactly.
It's all informal and things like that. Now, some people do research, but who has time to do research every single day? If you really want to do justice, then you have to start at 9 o'clock in the morning. You have to stay glued to your screen till 3 o'clock, 3:30 in the afternoon, and you have to do some research afterwards. Every single day. You cannot break for lunch. You cannot go to the bathroom. You cannot do, because market might change. इतना discipline किसके पास है?
See, Akshay sir, research. My experience, research is a full-time job. Yes. And now, previously, if you look at 2004-5, we used to have chartists, technical analysts. Now dealers have started looking at the research. Even the clients have started looking at the chart. This RSI, MACD, and other terms, which many of the times we also don't understand. And they started predicting the stock. So that is dangerous. I see that as that half knowledge is very dangerous. For the investors. Now, in that case, it is better for them to come out, and especially if you look at this, you see, we will be doing a lot of value addition for the smaller investors. Those who really want to make money, and instead of investment, they move towards speculative positions. Yeah. They start betting on a particular stock or the market, that later start doing this option trading, or maybe particular stock, news-based investments and other things. So this will be a systematic approach towards their investment, and we'll be able to do a lot of value addition for them. Yes. So I completely agree with your point, and I'm sure all the clients connected here or the team members who are connected, they also must be doing agree to this. And I assure you, on behalf of my team, we'll do a lot of justice to the kind of efforts you have put in.
No, thank you. And the beauty is that tomorrow somebody says to me कि हमको option trading करना है, हमको अपने आप कुछ करना है, जरूर करो यार, मना कौन कर रहा है? We are not saying don't do it. All we are saying is that take some portion of your total capital, put it in Select, and use it as a benchmark for your other investments. यहाँ पे सब बोल रहा है कब खरीदना है, कब बेचना है, क्या करना है, कितना खरीदना है. Machine is giving you a recommendation for everything. Now do that, and if you're, and doesn't mean you completely stop doing whatever else you're doing. This is in addition to everything else. So it is very helpful.
Right, very true. So Asna, can we open the forum for question and answer session?
Yes, Vijay, absolutely. I think before we do that, I wanted to thank you because the question that you asked, Ajay, about the variable with the amount of investment, we've got a lot of questions on that. So I think we've already started our question answer round with the question that you had asked, so that matched really well. And I do have a question, and that question is for both of you. How will the model perform with respect to unprecedented situations such as recent COVID outbreak, where I think market was very volatile?
Let me try and answer that. So it's a very good question. So market volatility can happen because of anything. It can happen because of Ukraine war. It can happen because of COVID. It can happen because of Hamas and Israel events. It can happen because, tomorrow Biden falls ill, or the markets are volatile. Okay, now what do you need to do in a volatile market? You need to watch your portfolio, and you need to make changes in response to the volatility without changing your long-term objective. Equity select kya karta hai? It looks at the volatility, looks at the thing, and every 2 weeks it makes the changes. So it is actually a beautiful way for you to respond to market volatility by adjusting your portfolio every 2 weeks and being able to do that at the click of a button without a ton of research and all janjat that you'll have to do otherwise. So I would argue that a product like Equity Select is much better for volatile markets because it allows you to respond very quickly. Now, good mutual funds actually do the same thing. There is a mutual fund manager, but they will not buy 10 stocks. They will buy 140 stocks. Okay, they will do the rebalance, aaj ye becenge, kal kuch kharidenge. They're constantly doing rebalancing all the time. Okay, now we don't have the capacity to take 150 stocks. I don't think it's necessary either. But giving you 10 stocks and allowing you to rebalance every 15 days, just think about it. You are becoming your own mutual fund manager without paying 2% fees. Because what is mutual fund? A long-term exposure to equities with regular adjustments. What is Equity Select? Long-term exposure to equities with a machine-driven adjustment every 2 weeks. So this is a very easy way for all retail investors to become their own mutual fund managers. And that is why I think it is an evolutionary step in how investment products are created and introduced and launched in the market. And this is where technology, because without technology it's not possible to do it. It is only technology that allows you to do it. And this is a way where technology is being used to make life easy for our retail investors, allowing them to do things that they could not do before.
Asna, can I add a few points on this?
Absolutely, Vijay. Yeah.
See, I'm sure Akshay sir will also agree to me. Whenever these kind of events occur, let it be stock related or the market related or geopolitical, there is a lot of noise which is created, in the markets, and as an individual, we get emotionally carried away. So at the time of COVID, there are many investors who say, "Clear, first sell, then talk," right? Now, at the same time, these kind of systems, which are working basically on the data, basically not, they do not get carried away. They are able to take much better decisions compared to an individual. So the question which was there, that how this system would have performed, I'm damn sure, it must have performed much better compared to an individual who has taken a call on his basic instincts or his basic understanding about the market.
Yes.
And I can assure you that over a period of time, it is not possible for an individual to take such a decision which the system or the process or the fund manager with the clear thought process and strategy can take.
Yes.
So there is no doubt about the performance of the the product.
Yeah. No, that is absolutely. See, even take COVID. Yeah. COVID में क्या हुआ था? It is not that the entire market went down. There were some stocks that did brilliantly. All the technology stocks,
Exactly.
Google, Facebook, did very well. Tesla is a child of lockdown.
Right.
Robinhood made billions in lockdown. Zoom did so well in lockdown. All the pharma stocks that were making vaccines for COVID did superlatively well. So there was a section of the market that was doing very well. Now, if you had a tool or a machine or an artificial intelligence engine doing all the research across the globe and telling you where you can invest, surely that is what you want.
Yes.
So it can be very useful in volatile markets, particularly.
Absolutely, I agree with both of you here, especially on the unbiased point that Vijay touched upon. So our next question is again for both of you. This is from Jayawardhan Patil. His question is, he wants to know about your views on basket investing as a future of investing.
Vijay, you want to take that or?
See, Akshay sir, as I mentioned multiple times that we deal very closely with the retail investors. Now, I see that for a retail investor, it is not possible to go for a professional fund manager, for PMS or AIF kind of product with a bigger ticket size. Now, if something is available for them with their smaller ticket size starting as low as 1 lakh rupees, I am very sure that at least it will give them some kind of direction. So over a period of time, an investor with say 5 lakh rupees, 10 lakh rupees in his hand, he want to invest. So there is a clear-cut option of mutual funds. But if you want to go some aggressive investment, or if you want to look at some better returns, in that case, these baskets are going to do a lot of value addition, and it will be increasing his returns. See, it is like if you are going for a mutual fund investment, it is going through using a personal public transport. At the same time, if you are going for a basket, and that too from such a platform, in that case, in a systematic manner, you become a partner. Your investments are handled the way PMS or AI fund managers are managing, and that too up to your whatever capital you have. So the future seems to be very bright. The onus lies on people like us, the teams which are there in HSL to advise the clients in a right manner. That is what is important.
Yeah. No, let me add to that. That was a beautiful, beautiful answer. But let me just add to that. Look at it. I'm going to give you two examples. One is the investment example. The other is the transportation example. Today in India, in the investments world, if you have a small amount to invest, क्या करोगे? Mutual fund में जाओगे. You put a SIP or whatever. And if you have 50 lakhs or more, then you can go into PMS. But 5 lakhs to 50 lakhs में क्या करोगे? It's a white space. There's nothing there.
Yes.
Basket investing allows you to occupy, you as HDFC Securities, to occupy that white space. Below PMS, but above what a mutual fund investment might be. That is one way to look at it. Second way to look at it is as a behavioral thing. Now, when I was growing up, buying a car was sign of career success. Now I can afford to buy a Maruti or whatever, we bought. Now, so either you took a taxi, which belonged to somebody else and they just took you from place to place, or you bought a car. There was nothing in between. Now with Uber and Ola and all, that in-between option has come where I don't want the hassle of ownership and the capital cost of ownership. I want the convenience to go when I want at my time and the car to come where I'm standing rather than me looking for a taxi. I think technology is doing the same thing. it takes away all the hassle of research and all the expensive overhead of buying data and buying information from Bloomberg and places like that. And yet it gives you the autonomy to do whatever it is you want. So that's another approach to look at basket investing, where it gives you the autonomous decision making that you want as an individual investor, without getting caught up in the mutual fund process, without also having to invest in very deep research and so on and so forth, because otherwise, so it is really a new segment being created, and I think it is so relevant for India, where personal investing is growing massively, and it is not so much growing so much in Bombay, Delhi, Calcutta, Madras. It is growing in Class B, Class C towns. So आपका जो region है, वो बहुत relevant है. That is the sweet spot for product like this.
Right.
Akshaya, next question is on rebalancing. So we've got Pinky who's asking us about you speaking about 2-week churnings. If you could throw a little light on that.
So do you want me to explain how rebalancing works?
No. They just want to know why rebalance. What is the importance of rebalance?
Yeah. Good question. So let me explain. See, how do AI models work? It's like when you have a GPS in your car. And GPS is very, very useful. But before it works, you have to first tell the GPS ki jana kahan hai. You have to input your destination. Similarly, with the AI model, they're very, very useful. But for them to work, you have to tell the model what is it that you want the model to do. Okay, you can say, give me a 1 month recommendation. You can say, give me a 1 year recommendation. You can say, give me a recommendation in transportation sector. You can say, give me a recommendation for 2 weeks and so on and so forth. So equity select model creates 2-week recommendations. It does not create 1 month recommendations, does not create 6 month recommendations. So when you are using the recommendation from the model, all you are getting is a 2-week recommendation. So after 2 weeks, you have to refresh it, because otherwise the recommendation you're operating on has gone stale. So to get the best out of equity select, you have to take the 2-week recommendation and implement it by rebalancing. Okay. Now this notion is very popular in basket investing. And the earlier question on basket investing, I should add that we as a company love basket investing. And we are going to be coming up with more and more baskets for different duration. We are in the process of launching an intraday basket that is a 6-hour basket. So सुबह 9 बजे से शाम के 3 बजे तक. Okay, we are also looking at a 3-day basket. And the basket today are only stocks, but could very easily be options, could be derivatives. So, but the notion of a basket, what it does is it removes the concentration risk of a single stock and gives you a balanced recommendation for buying and selling and monitoring your stop loss and so on and so forth. So it's a very powerful notion, and you will see it becoming more and more powerful as we launch more products with you as partners and with you as our distribution partners. And so educating your customers on the concept of basket investing is very useful work, because बहुत काम आएगा.
Right.
Akshay, I think it's a follow-up question. They want to know what would happen if they don't rebalance on time, or if they miss a rebalance.
Nothing happens. You continue holding your old stocks, which may do well, may not do well. We can't say. Look, it happens. People miss rebalances. Okay, so let us say you invested on day 1. On day 15, you forgot to rebalance. Up day 16 pe kar lo, day 17 pe kar lo. Now, if you cross, the next rebalance will come on day 30. Now, if you're on day 25, then it is better to wait for the date 5 days later and then rebalance it. So you can exercise your judgment, and if you forget once or twice, you won't get the best outcome, but nothing will go wrong. You rebalance the next time around.
No, Asna, I would like to add one point here. See, it is up to the advisor or up to the HSL relationship manager. I would prefer that if the client is not forgetting or missing it by mistake, that's a different thing. But if it is not going to happen, right, in that case, ultimately the objective of the product will be lost.
Mm-hmm.
So in that case, you cannot complain for the the performance. And in that case, it is better to let us from the very beginning, let us clarify to the client that we need this kind of support. Now, at one point of time, as an investor, the client is willing to do all kind of research and do trades and other things. Here, it is just a rebalancing, which is maybe on weekly or 10 days or 15 days basis, and just by a click, it is if he's not able to not willing to do that, in that case he should avoid going for these products.
Yeah.
Because ultimately what will happen that the client will not look at the kind of opportunities which he has missed, and he will compare the underperformance or whatever performance he receives over a period of time. So it's a request to all our relationship managers, let us educate our clients that rebalancing has to be done as per recommended by the fund manager.
Yeah, and there's another aspect to this. I have been a relationship manager in my past life. As a relationship manager, what did I want most? For my client to engage with me. Okay, and कभी बात करते हैं, कभी बात नहीं करते, कभी phone नहीं उठाते. So it is a frustrating effort. The best thing I wanted was a reason for me to call the customer.
Yes.
Vijay साहब, आपका rebalance होने वाला है आज. भूलना मत. So it gives you a reason to phone the customer and have a conversation.
Exactly.
It is a very legitimate thing. You're not phoning कि आज क्या हाल है, कुछ anything for me and all that. You're phoning with a purpose to help the customer. So the fact that it gives you a way to contact the customer every fortnight, I think is a benefit. But it will help your sales efforts.
Akshay, I think that's some appreciative comments for us. Somebody's written great stuff. Where can I find the recorded sessions? I think this is by Pooja.
Wonderful, thank you, Pooja.
And we have another question. He says, "Dear sir, first of all, congratulations on such a great product. My query is, how will you notify the rotation of stocks? Will it be on individual basis? Also, with regard to fees, if I choose quarterly option and I want to change, let's say after 15 days to yearly mode, how will it work, if at all?"
So let me answer that. Firstly, on the fees, you can change it at any time. There is always an auto renew option when you put your fees. I would encourage all of you to ask your customers to select the auto renew option. But at any time, you can go to the fee section and change from quarterly to annual or whatever. That is always possible. Okay. And the other part was, how will it get notified? See, there are many.
Akshay, yeah.
We are using the small case platform, and I think this platform has certain, I think it sends you an email or something. But there are other ways I've seen. You can send a WhatsApp message. There is one broker we know of where they send a WhatsApp message saying, "Do you want to rebalance?" And if the customer says yes, then the RM goes and does the rebalance for them. So that makes it very easy. But it's a question of bank ki kya policy hai, kya permitted hai, kya nahi permitted.
Right.
So within that universe, but there is a lot of flexibility on how you can do this.
Yes, Akshay rightly answered. Once rebalance is pushed, everybody would get an email and would also get a notification update under the notification icon panel. And for the plan switch, yes, rightly said, it can be done, and you can do that by visiting the investments under the fee section. I think we have one more question. Last to do, just a minute. Right. So this is Akshaya to you. How have the tool been applied to US markets? We would like to know the results since US markets were almost stagnant last 2 years, excluding this October, November, and December.
So good question. We started our US portfolios about 6 months ago. They have done well in the sense they have outperformed S&P 500, but they have not done as well as the India portfolios. Now, of course, they've had only 6 months in India portfolio running for nearly 2 years now. So there is a time duration thing as well. We are, and we keep looking at US portfolios. It's a very important portfolio for us. We have made certain changes because we have to keep retuning till we're happy. And I think that ultimately, I think the US portfolio will do very well because see, the depth is very high. In India, for instance, we don't go below 7,500 crores market cap. Now, if you do use that as a cutoff, कितने stock आएंगे? 150 stocks. US में 1,000 stocks मिलाएंगे. So it's a very big market, and coverage is very high. Volume is very, very good. So I think we are at early stages in the US market, not as advanced as we are in India. And remember what I told you: the machine gets better the more it works. So the longer you give it, the better it will get. And the US stocks, I think in 2024, will start performing our US baskets as well as the Indian baskets. We have also experimented, and this is just experimentation, it's not live, with 3-day baskets in America, US markets, which have done phenomenally well. They're delivering like almost 1.3% a week. So anyway, but that's for future.
Actually, we have a lot of questions. I think for the last three, I'm going to pick up where. So Samjay asked us, what about dividends received during holding? What is maximum stocks that can be held in a portfolio? Any practical quote of such equity select model?
No, if you're the shareholder of record date, you will get the dividend. So there's no difference in that. You are holding the stock in your HDFC account. Okay, this is not a mutual fund where some third party is holding your stock. You are holding your own stock. अब आप shareholder है, dividend declare हुआ तो आपके पास ही आएगा.
Yes.
Our last question for the day. Somebody wants to know if there's an offer, any December offer running on Equity Select.
I think there is an offer for Equity Select for December. Ashna, you can update that. We had a very good offer in November, and we had over 500 people using it, taking up on it, which is, I think the highest number HDFC has seen in premium baskets.
Yes, absolutely.
Ashna, if you can give details on the offer.
Absolutely, Akshay. So we have a 3-month subscription of Equity Select Premium Basket for only ₹999, which comes out to be a massive 70% above discount off. Our original subscription charges for the 3-month plan is close to around 3,540, but the offer price, which is valid till 31st of December, is about 999 rupees only. And like you rightly said, Akshay, back then, it's only valid on upfront subscription fees and not on renewals.
Yeah, first 3 months. So I hope you take advantage of it. You still have 10, 12 days left in December. Go for it.
Yes, absolutely. Thank you so much, Vijay sir. Thank you so much, Akshay. I think, we've had the best kind of insights, we possibly can, depending upon the kind of, webinar topic that we had touched upon today. Just before we close the session, Akshay, Vijay, if we could have one-liner each as a takeaway from both of you, and I think that would be really helpful for all of us.
Well, I would say that, like I said before, don't worry about timing the market. Think about time in the market. Okay, I know it's a little bit of a wordplay, which you may have heard before, but I think it's very appropriate. Spending more time staying invested will get you better returns than waiting 3 weeks and finding हाँ आज Thursday को invest करेंगे और Friday को निकल जाएंगे. You know, that's not what gives you. It gives you a rush, but it doesn't give you long-term returns.
See, I would like to add one point, what Akshay sir has said. Overall the history is people they lose more money, compared to a falling market instead of waiting for a market to fall. Akshay sir, correct me if I'm right, if I'm wrong.
Yes.
Right? So, as he rightly said, there is no point of waiting for the market, and once you have trust, once the system is working, the fund manager is working, or the tools are working. In that case, let us trust them. Here, you have an opportunity to invest with a smaller amount and increase it over a period of time. So you can do initially, you can do some testing, and then look at it for a 2-3 months time. If you find that overall outperformance, or if it is I am damn sure that it will perform better than what an individual would have done during this 2-3 month periods time. So and secondly, this is just a beginning for basket kind of products. Over a period of time, we'll have many such opportunities. The moment our market starts moving towards the mature stage. So I think we should start in communicating these opportunities with all best possible clients.
Yeah. Exactly. Fantastic, Vijay. Thank you so much for giving me the opportunity to talk to your team. A great pleasure. Thank you.
It was, the pleasure was ours, to have, views and the kind of products which you have, prepared. And I assure you, sir, you'll find 100% support from me, my team, and the clients.
Thank you very much. We appreciate this a lot.
Thank you, sir. Thank you so much. Thank you, Ashna, for coordinating this.
Thank you, sir. Big thank you to both of you for an enriching discussion today. Your insights have been invaluable. And to our audience, your participation has been fantastic. As a wrap-up, remember, the knowledge gained today is a powerful tool. Use it to carve your financial path and thrive in the world of tech-savvy investing. Until next time, thank you and goodbye.
Thank you. Bye.